After many hours of trading raw price action and looking at price charts over the years, I can tell you that no matter what market you're looking at, what time frame, the market likes to move in pairs of two. The market moves in twos. You got to remember this. So even if I have this chart on here, no indicators, just raw price action, Japanese candlesticks. This is an NQ chart on the 3-minute. I don't even trade NQ, but I'm just using it as an example. I trade the ES mainly, the ES futures market on a 2000 tick chart. But this is a time frame chart, and the same thing still applies. So here's an example. Let's get our paint brush here. So the price comes up, tries to go down once, tries to go down twice, fails, and boom, price goes up. It tried to move 2 times down and failed before it moved up. Here's another example. Price comes down, tries to move up once, fails, tries to move up a second time, and then it succeeds. You actually do get a higher low here, but you can see on the second entry long, as long as you have your stop loss below that swing, you're good to go. And even on this move up, tries to go down once, tries to go down twice, fails, and goes up. The price likes to move in twos. And you'll see this just play out over and over again. I'm just going to choose any random chart. So let's do, I never look at Euro US dollar, but let's do that. So we'll go over to Euro US dollar. What am I on? 3-minute? Let's just to make it more interesting, let's just pick a random time frame. I don't know. We'll go 7-minute. Not sure if that's a good time frame for Euro US dollar. So in the comments, let me know if it is or it isn't, because I don't really know. I've never really traded Euro US dollar, and I don't even know if I'm looking at a time of the day that's valid. I'm just literally scrolling at random here to see if I can find some good examples. Okay, so here we have obviously downward momentum. Even on downward momentum, the market is going to find spots where, I mean, this is a bigger time frame, so it's going to find spots where you can see it tries to go down once, and there's the second attempt, and then it succeeds. Let's see over here. So right here, you got a low. It comes up. It kind of tries to go down right there. It doesn't really break lower, but it is sort of like a mini swing. But really, it's one swing down, it comes up, and then here's the second leg right there. It's a little bit wider because it got sideways for a second, but that's another second leg down. Then it started to kind of just become a range. Let's see what happens when it breaks down here. Breaks down, tries to go down a second time, tries to go down a third time, fails. Gives you a little scalp right there. Let's see when we're going up over here. Market tries to go down once, tries to go down twice, fails, goes up. Let's see here, from this high, tries to go up once, tries to go up twice. This one got sideways and then went up. So I mean, but it still is fair to say you got one leg here, second leg here, and then it goes up. One leg, second leg. There's just two-legged moves everywhere on these charts. Here's another one. Pulls down one leg, comes up, second leg. A huge leg, but and then it reverses. This one here, first leg, second leg. It then ends up continuing down, but you get these two-legged moves a lot, and they can give you really good trade opportunities. So I just love second entries. Let's actually try. I don't know. Let's try Bitcoin. Why not? We'll go Bitcoin on a 1 minute. Let's say. Oh, this chart is crazy looking. Let's go over here. All right, this is just recent price action, just to see, so that you know that I'm not cherry picking anything. So here's a low. First attempt lower, second attempt lower. You can go short below this, and you even get a lower high confirmation. Nice easy scalp. Even from here, you can kind of look at this almost like a double top, and you could say first swing higher, second swing higher, and that's a long. From this high, there's one attempt higher, and now it's pulling down. I wouldn't be surprised if we get some sort of bullish attempt, and that would give us a second leg to go after, second entry. From here, got first leg down, second leg down, fails, goes up a little higher. So there's always going to be failures too. but the market tries to make its moves in twos. It's very rare that you don't see that happen on a move. Like that's why there's these choppy corrections, and you can always see these. I mean, even just these little ones, like right here, first entry, and then it tries to, well, this is kind of like pulls back, and then it goes up. But there's two legs in there. So hopefully you see that. First leg, second leg, and then it goes up. Another one. First attempt lower, second attempt lower. That gives you the next leg. So you're going to see these over and over. So what I'm going to do, now that we've looked at a few of these, is I'm going to show you how you can now implement this in your trading. So what we're going to do is we're going to review an actual trade that I took where I was recording my screen, and then we'll do a trade breakdown of what I was doing there, following the simple principle of the market moves in twos. And so right here, we have this uptrend working. And there's a first leg of correction and a second leg that forms. And we get a bullish bar for the second entry long. I enter on a limit order because we had so much volatility. You can see we're above the 21 EMA. We're coming off the bottom of the channel. So I move my stop loss right below my signal bar. And then I'm going for 8 ticks of profit on the first target. And I'm leaving my runner up near those highs because I'm expecting it to go up near the highs here. And you can see that we were at that Fibonacci 618 level. So there's a possibility that, we could get stuck there a little bit and we could get a little bit sticky here. But we have been bouncing there. So I'm assuming that we're probably going to go towards that 786 level. And you can just see when you have these bullish moves like this, and then you get that two-legged correction, you know the market moves in twos and that it's going to go for it. Now, the limit order helped me get a little bit of a better entry than going on a stop order. Usually I enter these on a stop order, 1 tick above the bar. But I just saw the volatility and thought that it was a better move to just go back a little bit on this one. And so you can see that the trade fills there. And so on 4 contracts with 8 ticks, you're making $400. And then you can see that we get a lot more right there. So these are the types of trades that we take all the time in my community. And I show these to everybody that's in my mentorship community so that they can learn how to execute these trades in real time, just like I do. This was a really, really solid trade. You can get runners like this all the time on trades like this, just playing the rules of the market moves in twos. And the reason I like these tick charts is because you can see the price action a lot more clearly and you see a lot more two-legged moves. Time frame charts, a lot of times the move is happening within the candle and it's really hard to actually see the 2 legs of correction. But on tick charts, you see them all the time. So I highly recommend checking out tick charts, and that's why I use tools like NinjaTrader. You can learn more by joining my free Discord and asking questions in there, and also checking out my mentorship community. All right, I'll see you in the next one.